Everybody, DayTraderRockStar here, and a video to catch us up to date on what happened today in the markets. Also, is our first day of our webinar. The webinar is taking place all this week. It's a free webinar, so I invite you to come over to DayTraderRadio.com. I'm doing a 4-day webinar, and it's a live webinar during market hours, so I explain the setups, what I'm teaching, the divergence setup, the high probability methodology, the ultimate divergence, everything that you need to learn. And basically, as you see on this picture right here, the webinar is about using small accounts, 1,000 to 2,000. I mean, it's general. You could use this stuff, but with any amount. But this is kind of the minimum you want to start with, and you could always scale up. So it doesn't really you don't have to have 1,000 to 2,000. But the setups here are great for beginner traders. So this is why I am focused on that, and making a minimum of $100 a day using a very small account trading these setups. Now, it's a free trial, so head over to Day Trading Radio or check in the description below. There will be a link, and you just have to you just sign up. It's nothing big. There's no credit card or anything. You just get a password and a username, and you get to use the site at Day Trading Radio. You get to use the site here for 10 days, and you get to use all the tools and stuff. So let's get into it. Today actually was an amazing day, and starting things off, I was, what we do is basically trade the micro futures, the micro E-mini S&P 500 March contract. And not to go into detail, I do that during the webinar and stuff, so I'm not going to go back and redo everything that we do. And again, you have plenty of time to catch up. It's only going into Tuesday. But what a day it was on just basically showing these setups. I mean, this is a great review video of this and what I look for in the markets. All right, so remember, the whole concept is trading the micro contracts, 1, 2, 3, 4 contracts, whatever you need to start off with, the minimal amount. I prefer using a discounted broker. You get good margins on that. You can pay $50 a contract. You don't put up a lot of money, and the setups are absolutely perfect. I throw this out there saying that this is the best site out there for short-term, for scalpers out there. If you want to find the spots to move and trade the market, I identify these real time. If you go to the site, and this is actually the chart you will see, as the market is going on, I'm doing play-by-play of the market action, and I am explaining to you with a circle as it's setting up why we like this area and what makes it a buy signal based off of the methodology. Now, the methodology, again, is all part of the HPS and methodology that I teach at Day Trading Radio. And I'll just show you a couple things. This is our rules of the trade, and what I'm looking for are divergences. And the divergences I break down into 1-star, 2-star, and 3-star divergences, and basically the combination of having other indicators line up with it. And we want to take those 3-star divergences, we want to take 2-star divergences, you can even take 1-star divergences. They all work really well, but depending on how good the setup is and how good I rank those, and I talk about them as we rank them, depends on how much of a position we want to take. And again, this is just a small, basic, ground floor level, smallest minimum size that I would start off with, and you can always scale up. It has nothing to do with, I trade bigger than that, or, this is just basically showing you that it works with a small account, and it works great with a small account. It'll work great with a large account, even better. I mean, you're going to make as much money as you want to make trading these setups. Again, not to go into this, but all these things fall into my buy-side divergence lower entry criteria, and these are the criterias that we're looking for. If I actually bring this up, let me see if I can bring this up over here. If I have this on this screen, I don't know if I have it on this screen or not. That's my buy-side divergence. Let me see here. Here it is. All right, so this is the business plan we want to use. And again, we have to have an order entry criteria, profit exit criteria, and automatic stop criteria. That's what we covered today. Tomorrow we're going to go review that, and then we're going to go into what's the risk management of the method, how to increase your position size. We talked about how to set up charts. We'll go into that a little today. But again, if you miss any of it, I do review a lot of it, and we'll go into that. So let's get back to the setups today. We start off the day, market opens up. Right out of the gate, we have a perfect setup, perfect divergence setup. Identify this real time, live, and from this point on, this was actually the best setup of the day. It actually went, and again, I always say you probably won't get the best fill. You're not going to get, an armchair quarterback, Monday morning quarterback is going to say, well, you're not going to say, I'm going to get down here. Give yourself the benefit of the doubt. I think by the time we get into a position like that, you could say it's about 44.20. And even though the move basically went from 44.05 all the way up to 44.60, we call it 44.10 to 60, a 50-point move. This was a 50-point move on the S&P. These are good times to be trading futures. This is an amazing time in the market, and it's an amazing time to be starting out because a little bit can make you a lot. Now, just to put it in perspective, if you in the perfect world, in the perfect scenario, you took the trade and you got in, you got out at the perfect level. I'm not saying you're going to do that, but just to give you a scenario playing out, one contract and a discounted broker cost you $50. On the MES, you could do the NQs, you could do the YM, which are the Dow mini futures, but we use the benchmark S&P 500 because it has 500 stocks. That's the one I concentrate on. The E-mini contract is $50. The micro E-mini contract is 1/10 of that. So 1 point is only $5. So if you got in with one contract here, which I always recommend more than one contract because you're going to get a move and you want to be able to capture the bigger moves. So we take profits. We have a level to take profits, and then we move our stop up into a break even, and we have a free trade, and we continue to chase it up. But in this case, if you had one contract, just to give you, and again, $5 a point and went up 50 points, 5 times 50 is $250. You put up $50 for that contract, you can make $250 in the best case scenario on something like this. I mean, if you held it the whole day, you're talking it was up like 70 points. I mean, that's just one contract. If this was what I would consider a 2-star divergence, meaning it had the right time frame. If you see a divergence in that 9:30 to 10 o'clock zone, it's usually a really good divergence. So I would put on a little bit more on your contract size. So if you even had 2, 3, you just multiply that by your contract. So if you're making again 5 times 50, 250. If you had 2 contracts, that would be $500. $500 on this move right here. That's not bad. We move it all the way up here. Not to say there was other moves around here. This was actually called, this area right here is called a 2020 bull flag, and that's another technique that I teach, and it was a great one. It was a textbook one. It came down to the 20. We had the fast rotation. We had the embedded stochastics above 80, plus we had the holding of the VWAP. Also, remember, in our divergence, our rule is once you have a divergence signal, very easy to put your stop at the break. Your stop goes in at 1 tick underneath the divergence low. There's 2 stages to a divergence. 2 stages to a divergence. And again, I'm reviewing some of this stuff from the webinar here. We'll go back here. Again, stage 1, the divergence should be stochastics are under 20. So here's your stage 1, your low. And you can see that stochastics are under the 20 line here. Stage 2, the low should bounce. That low should bounce and bring the stochastics back above 20, and it moves back up. You'd like to get it up there around that 50. You could rotate. It doesn't really matter, but we'd like to get it higher than that 20 level. With the market bouncing, it quickly comes back and makes a lower low. Stage 2, the stochastics hold above the 20 line as the price makes a lower low. And that's your divergence. Price is doing one thing, the stochastics are doing another thing. They're diverging each other. All right, and that is our signal. All right, the optimal thing is having that 5-minute and 60-minute stochastics should be moving up in the direction of your trade. And if you have the lower low, is capped with a reversal candle, that even adds to the setup. And that's exactly what we had in all these divergences. Now, this was, and and again, there's so much I'm going to go over tomorrow with reversal candles. I would definitely tune in if you like using candlesticks. I mean, the important thing about reversal candles is to know how to, there's 4 of them that I like to use: the hammer, the piercing pattern, the engulfing pattern. Then there's some other ones that we could talk about. There's the 3 main ones right there. So we got that big move. We have our second move. It goes all the way up here. And then we identify a sell signal. It's a sell side divergence. Same thing, but on the sell side. And you can actually see the market actually pulled back down here. And I didn't even mark this one off. I marked it I'm at the home office today right now. I'm at my office. So if you watched today's show, we actually pointed out every pullback in a very bullish market like this, you could probably start to understand that the market pulls back, stair steps up, pulls back, stair steps up, pulls back. Lots of times I'll identify those pullbacks and we look for those divergence into it. So we have a little low, a pop in the price, a little low, pop on the price brings us back above the 20. Price comes back, takes out the lows, holds above the 20 line here, and boom, right back up. Now the result of this, and again, this is the key to making money. The key to making money is taking your profits, not to get greedy and have discipline to wait for these setups. Identify these setups throughout the day. All you have to do is basically tune in and be part of the process of waiting for them to set up. And that's the key, because you go into a casino like the markets, you tend to want to throw your money around and get into these games and try yourself. It's fun, you have a button there. The way to make money is to push that button. You have a chance, but here you have a great chance. This is what I call, this is when you have to sit down, you have to take your money off, and put it up to play, if you know what I'm talking about. And that's, I always use the reference of blackjack, poker. When you have your good hand, that's when you put your money up there. So these are your money plays. You take a position, you can take a position. You have a divergence here, you take a position. Each time you take that position or you get that a notification, we have some tools to help you also. The RockBot identifies a lot of these for you. You put your stop under break even, you're already protecting yourself. Actually, I shouldn't say break even. I should actually correct myself and say you put your stop in at the low of the divergence, 1 tick underneath the low of the divergence. That means if it fails, all right, fine, but very rarely fails. I'm not even, today none of them failed, actually. They tend to fail. I'll tell you what happens. They tend to fail when you're trading against the market. So buy-side divergence in a bullish market on the pullbacks are the best. Short-side divergences on a bull market tend to get run over. So again, easy enough to go with the tide. Easy enough with the wind in your sail. Use it whatever analogy that you want. It's important. So the market kind of popped and we're just kind of pulling back into a channel. And here we are, right here, another textbook. And again, you see this line here, this blue line? I put it up here. You see that degree of angle right there? If you know geometry and your math and stuff, the flat line here. And then you move up to a 90 degree, you have a 45 degree angle, you have a 90 degree angle, that's a 180, and the 360 is a total circle. So here's your 0. I like to get those divergences. A really good one is an angle, between the low and the higher low above 20 degrees. All right, anything above 20 degrees is usually really good. The steeper the angle, the better the setup. So if you got a 30 degree angle or even something, sometimes you don't even see it. It just doesn't even show you the divergence. Those are kind of hidden divergences, and those are really, really good. So we actually see those a lot too. So you just got to know what you're doing. So again, another great setup. You get a pop on it. You take your first rotation. You take your trade off here when the first rotation gets up to above that 80 line, which brings us up here. In this environment too, you could be getting an average of 5 to 10 points on these 1 minute moves. I've been in the market where the market will all day stay within a 5 to 10 point range. Now we're seeing 5 to 10 point ranges in one candle. It is incredible. It is incredible. It is absolutely incredible. So that's why, you got to take advantage of it while the time is, when this is here. It's like a big salmon run or something. You got to throw your line in the water. Another great analogy. Anyway, another nice pop. The day continues, and this is, I know a lot of people are watching this, and they're saying why, giving me some good feedback in the chat room. But once again, right around noon, we had this small little pullback, and here you go, another nice divergence. You had that low, a lower low, a higher low above the 20. I always say try to keep that above the 20. Try to keep this angle here as high as you can. I'm not saying you have to be above 20, but I prefer them to be a decent angle, from the low. This one happened to be about 10 degrees. That would probably be the minimum. And again, you can see a nice move up. It got back. It hit that 80. If you took it off, that's fine. It never came back and took out the lows here. So it did have a little pullback. The other thing we're going to be paying attention to is that 60 period. We're going to study more about that 60 period tomorrow. So I'll be concentrating more on that 60 period and showing you what the bigger trends are. And the bigger, the scalps could easily be, you could apply that same technique, if you're looking at an individual stock that is on a daily time frame and you want to swing trade it, the position hold it for a longer time frame, not just minutes, but I'm talking days. So you just look for that same thing on a daily chart. Lower low on the price, higher low on the stochastics. And we had 67, or maybe it was 70-something divergences today. 70-something divergences, which is extremely bullish for the markets going forward. We're going to talk about that in a second. Another divergence, there it is. And then one more divergence here. That was another nice steep one. And again, nice move up here. You get in here, maybe 75. It got up to, it didn't really, went up about 5 points to 80. All right, that's all you're looking at, but you're not even worried about it. You're not trying to guess or anything. I already give you the criteria how to take these off. You take them off on the first rotation. First rotation gets up, you have nothing to worry about. All you have to worry about is waiting for the next one. Now here's almost a hidden divergence where you had that low, lower low, and you can barely see that little dip here. But that was a divergence too, right here. And with a reversal candle. Now, each one of these is a reversal candle. So reversal candle, here's an engulfing pattern, just about where the body engulfs the previous body. That's a really good engulfing pattern. And because it's a divergence, you're already taking out the lows. So the key is you have a lower low and you have an engulfing or reversal candle. Here you had a lower low and a hammer, type of hammer there. Reversal candles, if they're in big bodies like this, but if you have a tail, you want the tail to be twice as long as the body. So if you have a little body, you want that tail to be a long tail, at least twice as big as the length of the body. That's my rule on reversal candles. Here you had another one. Big tail, took out the lows, higher low in the stochastics, moved up. You took your profits, not to worry about it. Set up again, took your profits. Overall, the whole day was just rock and roll like this all day. Up here, coming into about 3 o'clock, we started to see the market kind of get a little weak. And what we see here is, look at this. What happened? This is what we call a double top divergence. It's one of the divergences. And again, these could also be all found on the Ultimate Divergence course. That's found on the School of Stock. If you want to learn more about divergence setups, I have a great course. But also, members of Day Trading Radio get access to that course. If you're a lifetime member, you get those courses for free, and they have probably 30 to 40 hours of lessons. This is an important lesson right here. The double top divergence. To see how the stochastic started to roll over. And again, the momentum trade here, especially for someone out there is learning this for the first time, the concept behind stochastics and what they're measuring is not about being overbought and oversold. It's about the energy. The stochastics are measuring how these candles are closing compared to the previous candles in the formula. So in this case, I'm dealing with a 9.3 stochastic. Here we're 14.3. Here's a 60.10. The 3 represents the moving average applied on the 9. But the 9, it takes out the last 9 candles. And as the last 9 candles are actually starting to close higher into those, on average is closing higher, actually up above the 80% mark of those candles now. And that's what that means. But all of a sudden, at this point, you're starting to fail. And we don't get back up there, even though the price is up there. So we're seeing that negative divergence. Remember, the positive divergence stochastics are making a higher low. Here we're making a lower high. And at that point, you started pulling back and chopped around, eventually dropped. And I do believe this was some Fed talk here. So that was kind of you can't really do much about that. If you get news trumps everything. Even if you have a great setup and news comes out, the news could get marked. But that ripped right back up. There wasn't any signal there to take. But you're in control of your own destiny when you're trading here. And all you have to do is wait for the next setup and wait for my alerts to go out. And from that point on, the day ended. We ended up on the highs. This is the after hours market right now. It's actually moving down. Oh my God, look at that. See, I should have had my platform up right here. So you have this nice little downward channel right here. And I'm always measuring out the market as a channel. From one section to the section, down, up, down, up, down. And what happens is you get a low, a pop, a lower low, and what did we see here? A higher low. Another great rule, the divergence. If your divergence is inside of a channel, 9 times out of 10, that channel will be broken. So you have a divergence right here. You have a recognizable 1, 2, 3 channel. You know your target's going to be above this downward trend line. That's a massive move for 9 o'clock at night. You're just sitting around watching, whatever TV, and we have day trading radio on, and you see a divergence set up. You could just push that button. You're going to get some points there. You could make $50 to $100 depending on what you have on the. This is what we're here for. This is my passion. This is how we trade. That happens. You just have to be in front of them. You have to take the trade. You have to develop the discipline. You have to be on a good team. That's what we do at Day Trading Radio. So I invite you all to come by tomorrow. Watch the same setups live. Today we talked about what brokers you should use. If you have any questions on this, I don't mind helping beginners. I love it. That's what I've been doing since 2007. Teaching trading. Trading full-time since 97. So there's a lot of information to learn, but it's all logical. It's all down to a perfect system. And that system is our business plan, and our business is trading these setups. And that's our product, all right? Understanding that and taking it off, you take yourself out of danger here. Like right now, you would have taken that off right up against the 50-period moving average here. You would have taken that trade. You probably would have gotten 4 or 5 points on that. Even if you had one contract. It's like a $20 trade right there. Times 2, $40. Times 3, just it keeps on going. And you don't have to worry, and you have to take profits. You have to take profits on the first rotation, because what happens is the market doesn't go straight up. It goes up and goes down. And if you happen to chase things like this, you get in here and you're like, and next thing you know, it's pulling back because you're late on your entry. Never buy it while it's up here at the 80 level. You have to buy it when you recognize that divergence. That's why it's important to be disciplined and wait for these things. All right? So let's talk about one more thing. What are we looking for tomorrow? Markets closed pretty good today. I think a lot of people are still looking at this as a possible bear market bounce, we still have some downside. Let's take a look at the big chart here, and I'm going to kind of go over that fast with you. Remember earlier I said I had 77 divergences today. Look at that, 77 up here, 77 lane divergence setups. That is incredible, and that's off the S&P 500. When I see that, and we look at the stocks that have given us Tesla, divergence, channel, that's on the weekly, by the way. Let's get to the daily. The higher low, the lower high, all the way down. These are all S&P. All these stocks today gave great bounces. I mean, yeah, some of them were, big bounces, really big bounces. Etsy, Great, probably a great level down here. And they're all still off the 20-period moving averages. Microchip. I mean, all these S&P stocks have put in divergence bottoms here. That's really, really good going forward. Now, we had a big bounce today. Could be a little choppy tomorrow. Doesn't matter what we do. For individual stocks, yeah, if you're holding swing trades, you have to go with that. You have to go with that flow. If you're holding it longer term, you're going to take your good with the bad. But if you trade in the futures, you don't have to worry about that. All you have to worry about is waiting for the signal to come in and then taking the trade. So let's take a look at the S&P right now. And I want to also take a look at the sector that I think is going to move tomorrow. Here's your S&P, which actually was a divergence last couple of days. And it was a closing price divergence, where the closing price here is where the candle body, is the close. Actually, on the downside, on the upside, it's if it's a positive candle, closed up here. But you can see that basically the closing prices have been going down, but the stochastics here have actually turned back up way above the 20 level here. And that happened on Friday, and that gave us a great signal to go long. If you saw that Friday and jumped on that for Friday, that Monday was looking really good. And again, explosion Monday. And you can see the direction here. This is pretty strong. The momentum here is now heading higher. The momentum is shifted to the upside. There's still a lot of non-believers here. I think we could go a little bit higher before maybe pulling back. Now, news trumps everything. And I hope they don't shadow ban me because I said Trump. Trump. The news is the thing that could squash any type of thing. I don't know what the news is for tomorrow when it comes to world events or COVID or Russia or China. We got to always be aware of that. But most likely we pull back into the candle a bit and then continue a little bit higher. The daily looks great going forward. The weekly almost got oversold, but it's not officially oversold. So that's something you have to consider also. And honestly, at this point, it's hard not to believe that we don't have a lot more volatility in this market. It's going to go straight back up to all-time highs. That's a tough bet to take. But is this the bottom? It could be. There's enough negativity in this market right now. A lot of people still believing that this is only a short-term bounce. That actually, I've seen the market fake people out, and all those experts are saying, at what point are they going to say, you know what? This is going. They'll just change their tune. And this is what we're looking at right now. We're looking at a big 1, 2, 3 channel. So we could actually get all the way up to this top of the trend line and get real close before moving back down. This could be a big pattern playing out over the year. There's a lot of momentum going on into this. We don't really know how this is going to play out. I'm not going to predict it. Momentum is good for the market. We have big earnings this week. I believe in Amazon, Google, a couple other big ones, Facebook. Maybe we have all these earnings. They could definitely help the market or hinder it. And that's it. One thing I do like, as we did trade today, and if you go to Day Trading Radio, I'll give you one last look at the Day Trading Radio. That's on the YouTube channel. But if I go to Day Trading Radio, and again, if you want to join that, just go to the register here. If you want to get into our chat room for the week, you get 10 days using all our platforms, our chat rooms. Check it out. Enjoy the webinar. You just have to put in your username and email address, and we'll send you back just the confirmation. You just jump in, and you're good to go. And you can ask all the questions. We got hundreds of traders on our chats. We got thousands of traders on our dashboard. And so once let's go back to there. Let's see here. Where was I? All right. So you want to when you sign in, here's your dashboard, and this. Well, right over here is where our trade alerts are. So we had an alert on the HPS. Don't mind that. That's me taking over the site here. We had an alert on waste management today. But today we were in the hood from last week. I sold my hood for $204 profit. We ended up getting into a new stock here, the GFS. I just picked up a call on that. Bought some Uber, added to my Uber. I actually had some Uber, bought some calls in Uber. And then I started selling some of my Airbnb for some nice profits we got into last week. So we got about $500 on that. Some HPS setups. And again, you could scroll back and see exactly what we're in. See, that's the 160 calls that I got into last week. I'm still holding some of these. And it kind of recaps what we're doing live. The chat room is right up here. If you open up the chat room, it'll open up. Right now there's 90 traders in there. I'll say good evening. See if good evening. Let's see. It is kind of late, but people are always hanging out and talking and stuff. And we have our tick strikes player, some other things that you would like. You get to access the tradeometer, which is a great little tool. And that's that. And this is a short-term scalping bot here that shows you the indicators for short-term trades. And actually, I'll just give an example of we'll zoom in on the YM here, and you can see that last buy signal right here, and that goes around the clock right here. It was a beautiful buy signal right there. There's a lot of different things that you need to check out. Once you get on there, you get an email back explaining how to use the dashboard and all the features, especially up here, the playbook plays, weekly videos, the alert managers. You get your text message alerts and stuff, all the archive trades, the HPS watch list, so much. All right, so I just wanted to point that out before we move on. Hey DTR, there's Bull Trader in the room there. So I think that's it. And the last thing I wanted to talk about is what sector are we looking at tomorrow? I'm starting to like the biotechs down here. We have a nice divergence on the LABU. We had a divergence back here, and we had a pretty decent move back up to 20. We're still away from the 20. This is at a point, and the LABU is the pro shares, or actually it's the Direction leveraged bullish leverage 3 times the return in the IBB. So it tracks the IBB, which is the iShare Nasdaq Biotech Index, the ETF. All right, you see basically the same kind of move, but it gives you 3 times the return. So if the IBB is up, say 5%, in theory the LABU will be up 15%. So let's take a look at what this was up today. Let's take a look here. This was up 5%, or was it up 4? No, it was up $5. Up 4%, 4%. And let's take a look at the LABU. And the LABU here basically was up 20%. So even a little bit more. So that's pretty impressive, right? So I like the LABU. It's been crushed down here for a while. But I like the biotechs going into tomorrow. I think we saw some strength into the close. It held on to it. It really didn't give too much up all night, and it held pretty good, especially when the market was selling off. So I need to. All right. So our target here on LABU, not a bad one. I mean, if we could look at 19. I would say we get up to about 23, where that 20-period moving average is, and that what we call a retracement trend line. This is a nice 1, 2, 3 pattern here. From this down to here, back up to here, come back down to here. Then we broke down through it, and now we should get back up to that level. So right up around that 23 level. Looks really good. See the volume picked up here also, which I kind of like. And the volume came into some buying over the last couple of days. I like it a lot for tomorrow. I want to watch it closer tomorrow. Might add to my position in LABU. We did pick up those options. And again, I'll see you guys in the market. I'm sorry this got out a little late. I'd like to get these out earlier so you can prepare for your own market research and add this to your list and stuff. And hopefully I'll see you guys there tomorrow. We'll talk a lot more. Let's see what the futures are doing here. Futures are off of that divergence. Came up. It's chopping around. I'm sure there's going to be a couple more trades tonight. I'll be sitting here doing some more research, and I'll update you tomorrow morning. I get into the office probably around a little before 8 o'clock, and we kick things off then. So hope you enjoyed this. Don't forget the webinar is continuing tomorrow until Thursday. And just go to DayTradingRadio.com. You'll see the link there. You can just sign up at the link if you want, or wherever you want to do that. You'll find it. It's there. All right, everyone, have a great evening. Talk to you tomorrow.